G'day folks, welcome back to another update for gold and silver. Now, both gold and silver are in a short-term decline after hitting some key resistance, and I'll go through the charts in a moment. I'm going to include some back testing as well, and make sure you hit that like and subscribe button to support the channel, and also reference a +1 videos for a deeper dive into some of our trading strategies we cover in today. Now, in terms of the outlook, both gold and silver are in strong uptrends underpinned by elevated geopolitical risk, safe haven demand and monetary policy dynamics, especially a weaker US dollar. Gold remains a primary flight to safety asset, now trading above $4,000 with near-term forecasts still higher. Silver is benefiting from both safe haven flows and its industrial renewables exposure, giving it potential upside, but also more cyclical risk. Major watch points: US Fed policy, rate cuts versus hikes, dollar strength, escalation or de-escalation of global conflicts, trade tensions and supply industrial demand for silver. Now, before I get stuck in the charts, I want to quickly show you this response and this feedback I got from a very enthusiastic viewer on one of my platforms that I post on. He says, instead of watching news on the economy and research history of gold and silver, such as blah, 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 or blah, 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 I didn't want to give any credit to those particular publications. And instead of watching this fool and his charts, because nothing like this has happened before in history, at least not like this video is a waste of time. Okay, that's this soy boy's opinion. And I responded, dear so-and-so, I never said gold and silver are not good investments. If a long-term play is your thing, then that's up to you. So again, if you want to buy gold and put under your bed for a long-term investment, there's nothing wrong with that. That's up to you. That's a good strategy if that's one of your approaches. I day trade, and according to my strategy, they're both still in a short-term decline, further from my last video, and they still are, and I'm going to show you that decline in today's video. Where they turn, no one knows. So that, in other words, they could be just a short-term retrace, or they can continue to drop. We don't know, okay? That's why I'm following the charts, and this clown above doesn't believe in charts for some reason. Not everyone follows fundamentals. Many still rely on technical analysis to trade. Again, for you, my viewers, I trust you know what you're doing. And if this is an approach you want to take, I'm offering you an alternative approach, and that's what I'm doing here. I'm simply offering an approach. Also, by the time fundamentals hit the news, price has already seen a reaction. Lastly, you can call me a fool, but you know nothing about me, so show some respect to me, but also to my audience for an alternate approach. Thanks for watching and your feedback. So again, some people have got certain preferences. Some people trade on fundamentals only, others look at charting analysis only, or some people look at both. And I'm simply offering an approach for you, my regular viewers, as a charting option if you want to look at that. I'm also giving you, as I've just shown you in a previous slide, some basic fundamentals of why gold and silver are doing what they're doing, okay? I've included that fundamental chart probably the last few months now to cover some of that fundamental approach. Now, I know I probably shouldn't have responded to some negative reviews. I always respond to positive reviews and appreciate those. Thank you very much to you guys. But for anyone that's wants to be a bit critical or abusive and show no respect, then I'm happy to reply in common. So let's get stuck into the charts. So let's look at the weekly chart first. And what we've got here, the price is still above the moving averages. So still bullish on the weekly, although notice the CCI has broken into that moving average range, which is a slight negative with that little bit of a pullback in the last couple of weeks. But also notice longer term, we've got this bearish divergence, lower highs on the CCI versus higher highs in the price, which means we're going to see a minimum retrace if this continues to drop down to this 23-38% Fibonacci range. And if you're new to the channel, what we look at is looking at the Fibonacci from that high. We take it back to the significant low before the divergence started, and that's measured by that 23-38% Fibonacci range. Now that's more than 90% of the time it hits that range, and sometimes it falls right through, other times it consolidates and it bounces out of there, so we don't know exactly what it's going to do. That's why we look at all the different time frames to get a better understanding where the trends are going. So the weekly is still somewhat bullish, although just be cautious, we still might see a bit of a retrace. On the daily, that's already broken below the moving averages on both the price and the CCI, and that was after that very small bearish divergence, double top there on the price versus lower highs on the CCI, and that dropped right through that 23-38% range. Now it's currently fluctuating around that 38% range. As you can see, it's pulled back to that lower level, and it could go either way. It could actually bounce higher and break higher, or it could actually start falling from there. We don't know. But notice here we've got this very narrowed moving average range, and that's why I like using the multiple moving averages. That shows consolidation in the price, obviously. but the CCI is still showing a potential decline. And now we look at the lower time frame again to see what it could potentially be doing. So the daily's in a bearish momentum at the moment. On the 1 hour time frame, you can see there, at the moment, the CCI is moving in tangent with the price, which means there's no divergence. Those lows and those highs are consistent in terms of highs and lows, and there's no divergence. There was a bullish divergence back here from that low on the CCI to that low. It's a double bottom versus the same period on the price chart. It's lower lows, and it's a bullish divergence. And what we can expect as a minimum, if it hasn't already, take it back to the high there. You can see there it's already hit the 23-38% Fibonacci range. At that 23-38% range there. It's touched it, bounced lower, touched and broken into that range again, and it's currently just about to break into that 23-38% range again. So once it decides which way to go, it could actually start driving higher or potentially further downside risk. So we don't know at this point. I would call that a neutral positioning at the moment with this consolidation on the 1 hour time period. Now in terms of the back test, and that's why I always show proof of the trading strategy. First of all, let's go to the daily. What we do is we go in the direction of the higher time frame. So if you're trading on the 1 hour time frame, I'll show you the back test on the 1 hour in a second. But we start going along from this period when the price and the CCI break above, they probably should have been there on that one, start breaking above the moving averages, and you would have started going long at that period. And if you look at the back test, that's that same period. This is the 1 hour chart, the same period. What you do is basically follow the daily trend. Make sure you're going long only, don't take short positions. You can see there the moving averages, and a lot zooming out here because you can see the moving averages trending upwards. And you close it out every time those moving averages start to bend down. If I zoom in a bit, you can see the moving averages, those starting to bend down there. Take long positions, starting bending down, close out your positions. Up until where we are at the moment, and also paying attention to these bearish divergences. You can see there throughout this whole period on the 1 hour time period, I've marked these bearish divergences. And in each of those periods, you would watch it very closely. There, for example, when both the price moving average and the CCI moving average, after that bearish divergence started breaking down, you would have closed out your trade there. In which case, according to this strategy, there were no positions held. Now, at the moment, I've let this strategy run, and that's what happens. To show you the effect of what happens if you let it run, you have a massive drawdown. So always pay attention to the divergence and to any change to your trend as it's shown here. So looking at silver on the weekly first off, again the price is above the moving average, giving us a nice bull run, but again notice the CCI is broken into that moving average range, giving us a cautionary indicator, if you like, on a potential bearish turn. I've drawn a bearish divergence here, slightly lower highs on the CCI versus higher highs on the price, and that's at 23-38% range. Again, just to draw the Fibonacci range again, I'll take it back to that significant low before the divergence started, and there's that 23-38% range. You can see there it touched it, and that's all it needs to do before possibly bouncing off there. So that's a minimum of a touch point we can expect. Other times it could actually keep falling. Now, so long as that, if this CCI keeps dropping, that's why we look at the daily and the 1 hour in a moment, see what that's doing. But if that keeps dropping, we're going to see the price potentially drop as well. So at the moment, cautionary or neutral to cautionary long positions currently on the weekly. On the daily chart, you can see there it's already broken below both price and CCI moving averages, and currently it's consolidating, and there's that very narrowed range of moving averages giving us consolidation. The CCI's touched that moving average range, so if you're going short during that period, you would have closed out your positions probably on that candle there with a small loss or a break even. And there's no divergence currently on the daily. On the 1 hour chart, again similar to gold. Now here we've got we had a bullish divergence, higher lows on the CCI versus lower lows on the price, and it looks like it's already broken up into our minimum range. Let's draw the Fibonacci to that high. You can see there it's hit that 23-38%, sort of fluctuated in that range for a while, broke above it, and it's pulled back into that 23-38% range. Now at the moment it's neutral. I wouldn't call it bullish until we see a bullish move above the moving average there on the price. The CCI is already broken above, but remember we always trade in the direction of the higher time frame. So if you're trading on the 1 hour time period, you go in the direction of the daily, and the daily at the moment is in a short position, so don't take long trades on the 1 hour. because of that daily trend. So if you look at the back test, what we've done according to the daily, you would have gone long from that period around about the 28th of August, when the CCI had a fresh break above the moving average there, and so did the price. You could have gone long at that point there as well, possibly. Let it run. So what I've done on the back test, showing you that same position from around that 24th or 28th of August, going long, and most of that period you had a couple of little drawdowns, nothing too dramatic, until where we are today. You would have closed out at the very latest once you started seeing that bearish divergence, and you would have closed it out without that drawdown on that point there, with the price dropping a lot stronger. And again, remember, we're always going in the direction of the divergence. So if you're seeing here, for example, just eyeballing it, you can see lower highs on the CCI versus the same period higher highs on the price, and you would have closed out your position there once you start seeing the price and the CCI drop off. And you can do that all along the charts. Higher highs there. That's actually not a divergence, sorry. You want to see lower highs like you did back here. That one's okay. Then we had another lower highs there on the CCI and high highs there, as I said. Now, as I said, currently you've got a bullish divergence. That's already hit its target, but I don't trade on those in isolation. I would be going long during that period if the daily was in a bullish mode, and it's not. So just be cautious about trading these divergences, because sometimes they can actually turn, if this is in a downtrend on the daily, this could turn sharply to the downside and you might get caught out. If you'd like to get some insights into some share trading ideas, we do a weekly bullish scan for bullish shares across various regions of the world. And these are some of the trades we've closed out in the last 30 odd days from the 21st of September this year. And just some of the trades we've made. These are all being closed, so there's nothing open of these at the moment. And in those 30 odd days, we've returned about 9.67%. We had a couple of entries and closed out the last few days before the weekend. So it's currently sitting at about 9.67% in about 30 days of trading. So to get access to that bullish share scan each week, subscribe to the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.